Hey, good morning, everybody. Hopefully, everybody had a better weekend than this guy right here who blew out a tire on Friday. I've got a bunch of doctors today, little one's going in for surgery tomorrow. With that said, most important for those of you that joined me at the beginning, I'm going to tell you why the market is likely to spike on open today. Hopefully, you all can see that. Maybe I'll make it a little bigger. Okay, so what am I doing? I'm starting off from Discord, the same thing I start off every morning to see how the market ended, to see how I think the market's going to begin, to see the top flow on options, to look at all the most bullish and bearish trades. So what am I noticing? Well, I'm looking at the net premiums versus stocks for the SPY. And what am I seeing? And by the way, I went back 3 days here. So it's not just a single day. It's not just Friday's movement. I went back 3 days to get a bigger zoom out picture of what I'm looking at. So those that joined me early, congratulations, because you'll have a leg up on the competition. As we're seeing, so what do we see? We're seeing the SPY price drop significantly, right? So we see this little pattern right here. Over than that, we're seeing buy the dip mentality. But here's the most important thing. How did Friday close? Friday closed with a big spike in net premiums as the market dropped off a cliff from 442, 60, which was basically the high, back down to the 438 number, which was the low on the day, 438.30. So we ended towards the low. What's the mentality? It's still a continuation of buy the dip. Hasn't convinced me yet. We do have some important data coming out this week. But again, those that joined me early, I'm showing you right here. The calls were being bought off the chart to close business on Friday. The fact that we're sitting at open, probably flat as can be this morning, tells me that the market's likely, and here's just the net flow for a single day. So you can see the difference between the 3-day and the 1-day. But again, what are we seeing? We're seeing a drop in the market price. So what am I expecting? I'm expecting it to pick up at least half of the momentum that it dipped. So I'm looking to see 440, maybe even 440 and like 50 cents this morning off open. So the market opens, it shoots up. Now, I rarely come out with a prediction like that. I'm more about like, hey, man, let's just sit back. No need to rush. Let's just wait and see. But again, if you look at how the market ended on Friday, they were buying the dip pretty significantly. It doesn't mean that we can't drop out of open. So again, let's just talk. Last Monday, right? Let's go back 5 Mondays. 5 Mondays, SPY volume pretty low. Now, generally, we're in the summertime months, and I mentioned summertime months can be somewhat tricky, low volume. However, if you look at the markets on Thursday and Friday, we had 104 million on the SPY and 80 million on the SPY. Very, very good volume days. So with that said, I'm still thinking they're doing the buy the dip mentality. However, understand why I think volume will be low today and tomorrow. We have CPI numbers coming out on Wednesday. We have PPI numbers coming out on Thursday. Everybody's saying if they come in cool, the market should continue to shoot up. We also have the Fed pondering a 25 basis point interest rate for July. So we'll see if that comes to fruition. Now, here's the catch. China said the same thing. China's CPI numbers, which they just released, dropped. China's PPI numbers are at a 7-year low. So people will say, well, then Chinese market should be skyrocketing. No, because it also means that China could be easily going into recession or already in recession. Let's remember, the Chinese government is doing a lot to stimulate their market, asking banks to reduce interest rates, making it cheaper, less expensive to lend. There are some other programs when it comes to housing in China. So understand, I still think China is in a world of hurt, and I do think that will affect our markets. So if you joined me on Friday and you joined me early on Friday, I spoke about what a lottery option play was. I mentioned, and let me just go back and I'll kind of repeat myself. We spoke about lotto options. We spoke about first figuring out the market direction. Now, this is true for any options trade. You want to figure out the market direction. You could say like buy the dip mentality. That was the mentality that I was following on Friday. Then you find a stock that has demand. Now, it could have been like Rivian, could have been Carvana. It could have been a more spec play like Upstart or AI. I used Robinhood as an example on Friday. Robinhood was sitting at like $10.48. I mentioned the $10.50 calls. I said my exit strategy would be like $10.80. If I can get them for $12, $13, $14, $15, and I can exit out at $40, then I'm looking at what? A 220% return. Robinhood exit strategy was 1080. It hit like 1086, even higher. I did give the bear case scenario also. I said, if you expect a red day in the market and your mentality was, hey, this market is just going to drop, which we did not see, then you could have saw Robinhood at 1050 dropping all the way down to 1006. Now, again, This is your mindset for all of your trades. If you're having a buy the dip mentality, the market's going to continue to get stronger, then you're looking at a stock like Carnival, let's say. Carnival, which is closed at $19, let's say it drops down to $18. Now, your strategy on Carnival is saying, okay, I think Carnival is going up to $22 by the end of summer, by September. So the fact that it's at $19 goes up $3, you're talking about what, 18.5% higher. So you say to yourself, okay, if Carnival drops to $18 and I find support, if it drops to $17.90 and I find support, that could be a September call at the $20 range, something to that extent, understanding that Carnival could easily pop to $22. You look for stocks that have demand. All right, so we'll go over SPY scenarios. Let me just see if there's any other interesting shit that I wanted to drop this morning. Okay, China deflation fears mount after weak CPI data and PPI sinks to a 7-year low. I mentioned that. So again, people are saying, well, CPI and PPI, when it goes down for us, that's a good thing for the market, unless it goes down too quickly and is indicating that the possible recession is coming. China signals end to a tech crackdown. I already mentioned the Chinese government and things of that nature. Well, they basically fined Alibaba $1 billion. Alibaba has a $6 billion buyback program in place. So if I'm looking at some tech stocks in China, I could actually maybe take a position in Alibaba just because the Chinese market's been so beat up lately. I'm looking at the SPY again, continuing to buy the dip, 4-point range, 86 million volume on Friday, 104 on Thursday, which are strong volume days for our market. I mentioned this week, CPI, PPI, jobless claims Wednesday, Thursday, and Thursday. Consumer sentiment Friday, I don't pay that much attention. Again, it's more about volume, whether they're buying the dip or whether, the cues. And we can look at Apple in particular, because Apple definitely got sold off at the end of the day. When everything else spiked a little back up right before close, Apple was still being sold off. Got a message from somebody, hey, man, appreciate your YouTubes. Help me turn 3,000 into 20,000 last year in 2 weeks' time. Forever grateful for showing me what's possible in this market. So, I don't kill it every day. In fact, my trading sometimes marginal because I get in early, I exit early. However, it's all about strategy, understanding the market's direction, understanding what we could potentially see. And for those that are like, hey, man, the market only goes up. No, I would be extra cautious, especially since we saw 443 basically reject twice. We can call that a double top. Now, we've seen triple tops, and we've also seen breakthroughs. If we break through, then you're looking at 457 on the top side. Now, here's what moves the market pretty quickly. In 2021, which is 2 years ago, Goldman Sachs stated that for every 1% move up or down in the S&P 500, market makers must buy or sell $1 billion worth of shares. So when we see drastic moves higher, drastic moves lower, understand you've got the market makers being forced to buy or sell shares. Then you have the algorithms kicking in, the algorithms which are inflating the price or deflating the price exorbitantly, kind of, goes over what the true valuation should be because it's being controlled and the trading is being controlled by AI, by computers, et cetera, et cetera. Again, for those with me, if I had to look at one trade over the next week that I would consider getting into, I've been looking at gold. I've been looking for gold to somewhat bottom. Gold threw up on itself overnight, basically. So again, I'd be looking for gold to come down today. If I find a nice entry today, I would probably go out 14 days to July 21st, and I'd be looking at which ones are we looking at? The $180 calls that are currently $100 per option contract. I'd be looking for a 20% discount, so maybe $80, $82. Get in. I think that one will return me 100%. So again, I'm giving myself 2 weeks to be correct. I'm saying gold is close to bottoming. I don't enter a position all at once. So if I'm going to buy 10, 12 contracts, I don't buy 10 or 12 contracts. I buy one contract for like $85. Great. It went down to $80. I'll buy 2 more contracts. Goes down to $74. I'm going to buy 4 more contracts. Back up to $80. I'm waiting. I'm watching. I'm seeing the direction. I'm seeing the volume. Suggested strategy for any time you play options. If you're going in and you're buying 100 contracts at $8 each, you're crazy because they could be $4 then 5 minutes later, and you could be down 50%. So it's easier, even if you're buying that 100 contracts, to go 5 contracts here. It's down to $6. I'll buy 10 or 12 more. It's down to $4. I'll buy 55 more at $4. It's back up to $7, $6. I'm profitable. You buy all at $8. It's back to $6. You're still down 25%. Okay, earnings this week. not going crazy. We are starting a new earnings period. I'm just looking for anybody that I'm very curious about this week. And I'm not even seeing names I really care about. I've got Delta before the bell on Thursday, Cintas Thursday, Fast Now Thursday, Friday Citigroup, Ericsson, BlackRock, JP Morgan Chase, and United Health Group. Also on Thursday, PepsiCo and Progressive. But again, not a whole lot of earnings coming out. It'll pick up towards next week and towards the end of July. Let me just see if we got anything else on tap. I'm going to talk about a couple different stocks now. And please, if you have any questions, you guys can ask on the side. Already missed it. Okay, I was going to talk about Icon Enterprises. Remember, who was it? Muddy Waters shorted Icon Enterprises, went from, what did it go to? Let's go back 3 months. It was in the $52 range, went all the way to $19. Carl Icahn's a smart guy. This is how the last couple of weeks have been going since June, when it bottomed at $19.83. Unfortunately, this morning it's already at $33. But I was going to talk about this one because I heard rumors that Carl Icahn was doing something. I heard this in the middle of last week. Turns out, what is it? He's consolidating his loans. Basically, he could buy back shares, has extremely wealthy friends to buy back shares. And I'm not even sure what the short interest is here, but I had it on the top of my list. But it's already up 15% this morning, which means I'm not touching it. I already mentioned I'm looking for gold to come down today. So if I'm going to enter a gold position later this afternoon, options going out to the July 21st, I'm going to do it in the afternoon. Gold right now, 177.84 GLD. I'm talking about the ETF. Gold shares, not the ETF, SPDR. With that said, they're at a low right now. So if today's an outflow day, then I could expect gold to possibly drop to 178 flat or something like that, 178.18. That would be great entry for me. If I can get into gold at 178.18, and I think gold has the potential to run back up to, let me just go back here, 3-month chart, 182 and change. Again, those contracts that I spoke about, the 180 calls that expire July 21st, are $1 now. Again, I would look for a discount. If I get in at $83, $80, $79, whatever my average is, and I think gold will be $182, or let's just say a little less, but $182, making those contracts worth $200 each by July 21st, and I'm in at $80. Okay, well, my exit doesn't have to be $2 on the dot. It doesn't have to be 182. It could be 181.69, something like that, making my return 100%. So there's a safer trade for you guys. Again, on Friday, I spoke about lotto plays, and I was talking about Robinhood and a buy the dip mentality off of open, and I thought we'd get a spike in Robinhood, and those contracts made 200 and something percent. So again, that was gold. That's if I had to only pick one trade over the next, whatever weeks. That's something I'd be entering. I mentioned the yin, which is the 3-time bull ETF for China. It finally took some buying on Friday. However, it's dropping this morning pre-market because China is struggling. I already mentioned 3.27%. So again, I might be looking to buy later in the day. The fact that it's off this morning or whenever the market's at its worst, whether it be 1020, 1030, 1040, I might look at some yen options going out, probably only a week. Usually I like to be in and out of a trade. On smaller trades, I'll like to pick up, anywhere from 32 to 35%. Doesn't have to be killer. Again, Carvana spiked. I wish I had picked that one for Friday off some good volume. Not looking to get into that today. Carnival, only if we see some dips. Again, you're looking at Carnival back from when it was $13 earlier in June, all the way up to $19. Again, I'd be looking for a pullback. And if I'm making a specific guess on Carnival, I'm hoping it pulls back to like $18.20, something to that extent. I might take a first position. If Carnival sells off for today, tomorrow, the next day, it could easily consolidate the same way the market could. If the market's double topping, and let's pull up the SPY right now. Let's just see if I can remove that from the screen. Stop sharing, add it. Let's get the SPY up there with us. SPY, here we go. Share it. And a couple of things I'm going to show you all of what I look at. Okay, so we got the SPY up there. And I actually have the SPY chart. And again, we rejected the 433. I've got the 3-minute chart. But if we go to the 5-minute chart, again, we can see volume building. The volume leading up from this range right here. So I mentioned I thought we'd get a bounce this morning, and I showed you the net flow and why I thought we'd get a bounce in the market. So I'm pretty sure we're going to get a bounce on open to $440 all the way up to like 440, 54, something like that, somewhere in this range right here. Now, how can I be so sure of that? Again, I showed you all the net flow. If you're not part of our of our Discord, please follow somebody. We use Trady Ticks. But again, end of day, I'm looking at the net premiums right now. We had a spike end of day as the price dropped. And then once the market found a bottom, that's when we saw a spike. You didn't see a spike, as the market was dropping. No one's catching the falling knife. But when they saw the market bottoming, all of a sudden the call buying started picking up. So again, I believe that the market will likely spike on open to $440.50 and then perhaps, have drawback. I mentioned Rivian, that once Rivian finally tops out, man, I'm looking to short Rivian. Yes, I understand. Right now it's crushing it. Have you guys looked at the Rivian chart for 3 days? Let me just see what you write. It's the number one selling EV truck. They have a production deal with Amazon. Yeah, they've had that production deal with many, many years now. Seeing many trucks in here in Texas. I know it's not Tesla, but it's getting stronger. Yeah, no doubt it's getting stronger. They reported great numbers for quarter one, quarter two. I'm just looking at the stock price and the volume and what's on the shelf and where the dark pool numbers are. And I'm telling myself, when I finally see, it doesn't matter that we're talking about Rivian. It could be any stock. When any stock spikes the way that Rivian has over the past, 1 month? Let's just see where Rivian's done over the past 1 month. It generally has to consolidate, meaning profit taking. So we go back 1 month. It's up 70% in 1 month. 70% in 1 month. So again, I was talking about calls on Rivian at $14.50. I would have exited out, or I did exit out just over $20. I did not know Rivian would run up to 25, and shit, it could run even higher. It could run, I heard, to $28, $29. I might be looking to get a position then. Again, there's no inkling of a sell-off yet. Once I start seeing outflow and profit taking on Rivian, and I can go to the 5-day chart as well, your 5-day chart still looks somewhat bullish. If it plateaus, if I see some larger block orders coming in, that tells me, okay, there's profit taking. I'll look at the dark pool on Rivian. If I see large flows, whether they're going in and out, you get two sides of an equation. There's always someone buying, someone selling. So again, I'm going to look for the pullback on Rivian. I don't know where it is, 29, 32, 31, 27. I just can't be bullish Rivian right now because I could easily see a rug pull, large institution hedge fund selling their positions, of course, grabbing a short position first and pushing the stock down to $22. Of course, they'd want it to go up to 28 first or something like that. Oh, I wanted to show you Apple. So you were talking about different companies and the fact that we're looking at different companies. So let me go to, I got the SPY up here. I'll look at Google. So I'm looking at how Google finished the day. I'm looking at the end of day volume because, again, institutions trade heavily in the first 10 minutes and the last 30 minutes of the day. So I'm looking at this volume right here. And again, it's somewhat bearish, even though they're buying puts. A little worried about, let's just go Tesla, Affirm, don't really care. Chewy, light volume. Apple saw the same thing, but Apple found support at this level, 190.36. We had support right at this level, 190.75. So where's Apple trading pre-market? Again, it's off 0.58%, down under 190. So if I want to go and look under 190, then I might have to open up my chart a little more and see, okay, where can Apple find support? Right around here, 190.92, 190, 187, 89.54. If I go down to the bottom of this line right here, 189.25. So I'm going to myself, all right, I'm really looking for Apple to find support off market open, maybe drop down to 189. If that finds support, if the SPY goes up to 440, that's great. And then I would look for some type of rejection, 440 and 50 cents, something to that extent. So we can talk about the SPY again. I'll give you your bull case scenario, bear case scenario. Let's just go back to the 3 minutes. So do the 5 minute. All right, so we got the SPY. Your bull case scenario. Again, I'm assuming a 3.25 point range on the SPY today. We closed at what? 438.53. Right now we're at 438.21. So I'm going to look at the dark pool levels. So I'm going back to Discord right now. I already opened those dark pool levels. I can't show you guys because I actually have to run out to go to the doctor real quick. But dark pool levels. $440.60. So if the market gets bought up on open, I expect we might reject $440.60. If we're going a 3.5 point range, then I think we're going down to the 437 range. Understand the next dark pool level down. If I'm wrong, we give you your bear case scenario. Your bear case scenario is 436 is the next support. So the fact that we're going and we're opening at 438, let's say 438.50 where we closed, we could see a spike up to 439.50. And then we can see a drop down to that 436 dark pool level, which would likely act as support. So again, My figuring, okay, the market's going to get bought up on open. That just happens day after day. It doesn't take a rocket science to figure that out. I used to like when it used to sell off open, I would buy the dip and ride it higher. So with that said, I'm expecting the market to go up off open. I'm expecting 440.50, which would mean the market would be up 0.5, 0.6%, something like that. Then I'm expecting a pullback, and I'm expecting possibly 437 on the SPY. Now, your bear case scenario is we don't go that high to start. The market opens, we go to 439 and a quarter. Again, we're probably going to open at 438, so that will be a nice 1 point spike up. 439 and a quarter, reject that, and then we're going to test the 436. Okay, again, the market was being bought up heavily on calls Friday right before close, so that's why I believe the market will spike a little off open. Again, I don't know how much. The fact that we're sitting at 438, I think 439.50 is a possibility. I think 440.50 is a possibility, and then I can see it sell off around 9:50 a.m., something like that. We have a bunch of Fed speakers this week. I already dropped this information on Discord, but I'll share with everybody here. Barber is speaking 10 a.m. Monday morning. Daly, 11 a.m. Monday morning. Metzger, 11 a.m. Monday morning. Bullard, Tuesday morning at 9 a.m. Kashari, 9:45 on Wednesday. Then we also have CPI on Wednesday. We have PPI, 8:30 on Thursday. We have jobless claims, 8:30 on Thursday. And then we have Fed Speaker Waller again on Thursday after the close of market at 6:45. So again, my assumption of the market, lighter volume Monday, Tuesday, heavier volume Wednesday, Thursday, Friday. We're talking about a summer. I don't think you're going to see 82 million on the SPY volume on Friday. So I'm not even going to talk about Friday. So I'm assuming light volume Monday, Tuesday, heavier volume Wednesday, Thursday. Again, market direction. Bull case scenario. Bull case scenario is we're seeing that dip pre-market. Whenever we find support, could be 438 flat, 437.50. We're going to shoot back up to 440 and 50 cents. What are we going to do after there? I think the market's going to sell off. And I think we go right back to level where pre-market. Your bear case scenario is we get bought up on open, 439. We sell off at 439 and we head down to 436, which is the next largest dark pool level that could turn into support. With that said, appreciate you joining me this morning. If you like what I said, please thumbs up. I won't be here tomorrow morning. Again, my daughter's having surgery, 9 a.m. My 6-year-old daughter, ear surgery. So prayers to her. And everybody have a great day. 3 S's, safe trading, stress-free, secure profit. See everybody later. Not sure where that end music